Hello and welcome to Compass Global Markets Weekly Foreign Exchange Update. Well, it was a dovish Fed hike. Despite raising rates by 25 basis points, the United States Federal Reserve is in no hurry for any more. The dot plot plan for 4 rate hikes in 2017 is now being surmised to around about 2. We've seen the US dollar sell off quite aggressively in the last few days due to the gradualism in the Fed's tightening cycle. We've got Janet Yellen speaking on Thursday. She's the federal chair, and she has another chance to push the US dollar lower during that time frame. Look, we expect the US dollar to correct lower this week because of the absence of any policy-relevant US economic data, and also because of the lack of substance from the Trump administration with regards to their timetable for tax reform. You know, they've spoken about tax cuts and infrastructure spending, and it looks like it's going to test the mindset and the resolve of the Republican Party in the US. US interest rate expectations now will remain subdued, and we believe this will weigh on the US dollar this week. Look, elsewhere there's been some geopolitical unrest. North Korea has said that it will launch a nuclear attack on the US if a single bullet is fired. We've seen US forces enter the Korean peninsula. It's going to make it interesting to see how geopolitics now comes into the equation. On the 6th of April, US President Trump meets Chinese President Jinping for their 2-day summit, and that will be keenly awaited. The top performing currency of the week is the Aussie Dollar, the little battler. It's risen by about 3%. As the price of iron ore remains firm. The price of iron ore is currently up around about $90 a tonne, and it's increased over 8% last week. Now, last week we saw local Australian jobs figures come out. They were disappointing. The economy has unexpectedly lost 6,400 jobs in February, and the unemployment rate has edged up to 5.9%. The RBA policy meeting minutes are out today. If it's a hawkish tone, we expect it will push the Australian dollar higher. The propensity is for the Aussie dollar to remain in that 75 to 78.5 US cent range. Meanwhile, Australian banks are doing the job of the RBA in terms of raising their investor and home loan, owner-occupied home loan rates. It's taking the heat off the Reserve Bank to do that. Nearly 60% of all Australian home loans written in the last 6 years are interest only, and this is a concern to the market. Elsewhere, we expect the euro to strengthen this week because of the risk of a shift away from further ECB monetary easing. Also, French political uncertainty has eased. It looks like that Eurosceptic far-right national leader Marine Le Pen does not have enough support to win. And looking towards the Purchasing Managers Index, now this is a trusted survey of business activity in the Eurozone. It has reached a 6-year high, and that is one reason why we believe the euro will be in a fairly good range and well supported in coming days. In the UK, the Bank of England's intention is also for interest rates to remain on hold. We expect the sterling pound to be vulnerable to the downside because of Brexit-related comments. We know that Brexit will be triggered, Article 50 will be triggered on the 29th of March, and the 2-year process will begin thereafter. So we're expecting sterling to be weak as well. Thanks for watching Compass Global Markets Weekly Foreign Exchange Report.